All right, so this morning, the New York Fed published a really compelling piece about the ability for professional forecasters to make rational predictions. Now, there were two questions, right? Are forecasters aware of their fallibility, and can forecasters predict uncertain times? Well, the answer was no for horizons longer than a year, and yes for shorter run forecasts. So my next guest, one of the best out there when it comes to all of this in terms of market watchers and forecasters. I want to bring in now Yardeni Research President Ed Yardeni. And Ed, I thought the timing of this was interesting, given what you wrote, one of your headlines last week about the Fed not needing to cut and quote, what economists are missing. So what are they missing?
Well, I think what they're missing is that the economy has been remarkably resilient for the past couple of years in the face of tighter monetary policy. Now, while the Fed has raised interest rates by 525 basis points and the federal funds rate, they raised it from zero. So I think to a large extent, the Fed hasn't just tightened, they've also normalized. Interest rates are sort of where they should be relative to the strength of the economy. And I think we're seeing a lot of productivity growth, which suggests that the so-called real neutral interest rate is higher than economists, particularly those at the Fed, really understand. I think they're also missing that the consumer is resilient because we've got something like over 70 million baby boomers that are increasingly retiring, and they're sitting on $78 trillion in net worth, all-time record high. They're not saving it, they're spending it.
We know that, right? Hey, so we actually had a conversation like this before. Part of it we know is ego, part of it's the herd mentality. For me, it's really frustrating because at times the data changes, particularly these revisions. So, and it's frustrating for the audience as well. Now, you made a really bold call, speaking of calls, for Friday, the jobs report. You're saying up to 225,000. Walk us through how do you arrive at that number, because I think it might be the highest on the street.
Well, as you recall, a month ago, the markets freaked out when July's payroll employment numbers came out. They were weaker than expected. And the Bureau of Labor Statistics went out of their way to say that weather had nothing to do with it. Yet they had a chart in there showing that weather did have an impact on employment, especially on the average work week. So we're expecting that to the extent that the July numbers were affected by the weather, that there will be a bounce back, and it'll be something which I think it will look pretty strong. But remember, 250,000 was what people were expecting before all this.
All right. Great point. By the way, we saw that with the retail sales. When the computers went down in June, no one could buy a car, and they could buy them in July. All of a sudden, the economists were shocked at how surprising car sales were. I got to ask you about another headline. This from your quick take. I think it was yesterday. September is here. What can go wrong? I'm looking at all those right on the screen and want to ask you, what is going wrong?
Well, I think what's going wrong here is people are spooked about September. I and everybody else has been kind of thinking about what could go wrong in September, and it's hard to come up with anything fresh and new. So there's this fear of some black swan suddenly popping up. So I think people just kind of on a knee-jerk basis sold off because of September 1st. And they were doing that before the purchasing managers' data came out at 10 o'clock. And that data has been absolutely useless. Do you know that real GDP goods, the goods component of real GDP, has been increasing over 2% for the past several quarters? You wouldn't know that looking at the manufacturing purchasing managers index. So pay no attention to it. Any of that data that doesn't support my story isn't good data, or it's going to be revised.
You mentioned a black swan. Has there ever been a black swan when everyone freaked out for no reason? Could that be a black swan?
I suppose it could be. It would certainly be something different. But I think the underlying strength of the economy will shine through. I think the earnings continues to look good. Analyst expectations for forward earnings are all-time record high. No, I think that the fundamentals will support the market.
All right, Ed, thank you very much. Always appreciate our conversations.
Thank you.